Good morning, everybody, and this is your Dow Jones day trade setup for today. So, a couple of things on the go here. So, this is looking a little bit more interesting than what the S&P 500 is looking. And firstly, is that we have this grouping of the oscillators on the 8 hour. So that is indicating that we have potential here for an opportunity to buy into this. Okay, so that's the first thing. The second thing that is transpired is this level here, which is 34,344, is basically the bottom of a double bottom. Double top. So there's my double top. See, there's a previous high, next high, and since then it's been lower highs, and that was the double top. And you can see we got a close below that yesterday before the buyer stepped in. Now this area up here, 34,500, if you look to the left, you can see quite a bit of structure there. That would be the next level to pay attention to. The last thing is this trend line here, which is these previous two swing lows, has been breached. And you can see we closed below it. So that gives us two potential short signals that are brewing here. Okay, oscillators group like that just indicates that there may not be, it may just be an attempt at testing this trend line, and we've got another move coming up. We then have pretty much a short-term down trend line for last week. You can see high, lower high, and lower high at the open of this week, which was yesterday. And we also we've broken through the moving averages. So quite a few bearish signals here. But if you look to the left, we're pretty much sideways at the moment, so I'm not going to pay too much attention to that just yet, but it is worth keeping in the back of your mind. So you can see the 3 hour last week was all over the place. This week started off with a pin bar rejection of the moving average crossover, plus we are below the 155, so that's another two bearish signals here. Okay, so let's get down to the hour, and you can see it's been a pretty messy downtrend for the last couple of days. When I say messy, is that we're not adhering to the moving averages except for yesterday. So we were sideways, rejection here, and then fell off. Recovered ever so slightly, and that recovery is coming back, and this is where we're going to start using our 1 hour tails here. So recovery coming back into moving averages here, 34,500 area. Look at my oscillators. Okay, and every time that's happened, you can see we're falling off. So I wouldn't be too surprised to see us fall off again today. Come and test these levels. S&P's looking a little bit messy on its climb yesterday, but there's some telling signals here which are brewing on the Dow, and I just want to get to a daily as well, because you can see how messy this month has been. Last month was extremely volatile. Month before was sort of an upward trend into a very tight range before accelerating up. But what we have now is we've got a downtrend. You can see we've got the crossover of our oscillators. So that's easing off quite nicely. So there's two stories here. The first story is that this is really just easing off. So you can see everything is indicating that we're easing off, not necessarily for a big move to the downside, but for a consolidation and then a bigger move to the upside. So that's kind of what we're seeing. If you look at the lower time frames, from a day trading perspective, there is opportunity again for another leg down, I would think. So 34,500 area, and then sort of a stop above the high of yesterday, and you're looking for a move to the downside. So that's kind of the view that I've got. And if this double top, I mean, you can see it's pretty clear here. There's a one top, there's a second top, there's a tail. That itself is 500 points. So that's 1.5% move to the downside, which should give us somewhere around 33,800. Let's see what's that 33,800. something down there, and let's just have a look at the 8 hour. Yep, there's your next bit of support. So that would be the logical target on that. Okay, so guys, there is a lot of pressure, but now you've got to be really careful here. So the trend is up, and the trend has been up for I don't know how many years, but I think it's 13 or 14 years. You probably see it better on the weekly. So overall, you can see this trend has been up. Or should I say monthly? You can see how long this trend has been up. Yeah, we had a bit of a blip last year, and everybody's just dying for it to fall again. Oscillators are grouped to the upside, looking really tired, but look what happened here. 1, 2, 3, 4 years that it stayed up in that area. So the oscillators can stay overbought for extended periods of time. There's no two ways about that, especially on your higher time frames. So so I would be a little bit cautious about expecting this thing to fall to the floor. I don't think it's going to fall to the floor. We do need a healthy pullback though, and the healthy pullback, as far as I'm concerned, there is structure in place to get that to us. So this move here to 33,800 area, 3,400, that would be not a healthy pullback, but it would be a half decent pullback. In a healthy pullback, we're looking for at least a 10% correction of some sort. Whether we get that, I don't know. I don't think it's on the cards at the moment. I don't think the Feds are going to let that happen just yet. But it is well worth watching at the moment. So of the two, Wall Street, Dow Jones and S&P, I think Dow Jones is the one to pay attention to. Now bear in mind, you have a lot of bank stocks in this index, so what the Feds are going to come out with is going to impact them directly, which is why you've got this holding confusion at the moment. So for me, sit on hands, wait for the Feds tomorrow, see what noise they're going to bring to the markets and what it means to the markets. But after that, we hopefully should have everything behind us and we can get on with making some money again on the indexes. But for me, I'm sit on hands at the moment, but this is looking very interesting at the moment. So just keep a careful eye on it, and you may find 5, I wouldn't say 15, for moves are too quick for 15 minutes to catch it, but 5 minutes definitely catching it. You can see pretty well structured moves to the downside here, which would have been a fairly decent short if you're watching a 5 minute. Okay, lastly, I didn't point this out, on the S&P. Look at these gaps. I suspect these 5 minute gaps are fairly important because they typically get tested more often than not. So I wouldn't be too surprised to see this thing move down and come and test these levels. So that's kind of my play for today. I think if I've got time, just sit and watch this and see if we get some structure for another move to the downside. Anyway, that's it for me. Hope it helps, and we'll catch you later. Cheers for now.